Welcome back to Market Fatafat, a show where we are highlighting all the buzzers in trade right now. And with this, let's welcome Vaishali Parekh, who is joining us on the technical side. Very good afternoon, Vaishali, and thank you so much for your time. Let's talk about your first counter, and that is indeed from the pharma space, and pharma major supply is what you are tracking. Vaishali, we are seeing a lot of counters that are seeing great moves, but Cipla, as of now, holding above that 1600 levels. But where do you see the stock headed, Vaishali?
Very good afternoon. Yes, so pharma on the whole is doing very well, and supply is one of them. So I would say, well, it's sustaining about 1600 levels. So with a stop loss of 1580, I think the stock is ready to go towards 1650 as a trading strategy for now.
Okay, so that's the view coming in from on Cipla from Vaishali. But let's talk about Indus Towers, because this is also a stock in focus today. Now, Indus Towers Limited is all set to become a subsidiary of Bharti Airtel following its share buyback. In a filing to the stock exchanges, Indus Towers said that the shareholding of Bharti Airtel, which has been one of the promoters of the company, would increase to 50.005%, just above that 50% mark from 48.95% earlier. Now, the Indus Towers share buyback included up to 5.67 crore equity shares, representing 2.107% of the total number of equity shares in the paid-up share capital. It ran from the 14th of August to the 21st, and Indus Towers buyback committee yesterday approved the basis of acceptance of these 5.67 crore shares. You also had a UBS note coming in where they've maintained a neutral rating on Indus Towers, but more on that later as well. But well, yes, this is the news flow coming in for Indus Towers today on the back of this share buyback. They've become a wholly owned subsidiary of, they've become a subsidiary of Bharti Airtel, and on the back of that, the stock is up almost 1.7% as we speak.
Right, moving on then, let's focus back to the IT space, and Junai, take us through what's been the key takeaways from the analyst meet of L&T Tech.
About L&T Technologies and Services, the company has given a medium-term outlook. They are aspiring for a faster revenue growth. They are targeting to achieve about 18 to 20% revenue growth CAGR for next few years. Also, if you look at further key takeaways from the analyst meet, the first is the company has said that go deeper with scale is the clear strategy. They will be going ahead to aid a better and faster growth for the company. Also, acquisitions in second half of FY 2025 will only be able to drive the revenue run rate for FY 2025 up to about $1.5 billion. Also, company is looking to acquire companies with a revenue of ranging from $50 million to $150 million is what company said. Also, apart from this, in medium term, company doesn't see any moderation of slowdown. Even there has been a slowdown in EV space. Now, if you talk about the deal pipeline, the company has said on Y-on-Y basis, the deal pipeline has almost 2x'd, and on Q-on-Q basis also it has improved far. So that on the back of that, L&T Technology will be in focus, currently trading with the gains of about 4%.
Okay, so that's the view coming in on L&T Tech. But Vaishali, you've picked out Biocon for our viewers, another stock from the pharma space. Seems like the pharma space is standing out to you. Give us the levels that you're spotting for Biocon going ahead.
Yeah, actually, we saw good strength. It's opened up strong with a gap up, and I think that's ready to show further run up. So I would say 345 would act as a near-term support, and I would look at 380 to start with as a positional trade target.
Alright, that's about Biocon. Two pharma counters that Vaishali is tracking. One of them is Cipla and the next one is Biocon. But let's shift focus to the telecom space then, and today UBS has come out with a note on this one where they have came out with a target on three counters related to the telecom space, be it Airtel, Vodafone as well as Indus Towers. What UBS is highlighting is that they do maintain a neutral rating on Airtel and a buy rating on Vodafone Idea as a play on the potential government relief measures, because 60 to 70% of the tariff hike flow will come through to revenues over the next 3 quarters, and they do expect the churn to be lower this time as an incidence of a double SIMs has come down substantially. They do see some downside risk to the consensus estimates and stay neutral on Airtel as well as Indus Towers. Airtel, like I told you, that the rating is neutral, but they have hiked the target price to 1595 rupees. For Vodafone Idea, there has been 1 rupee hike on this one. They do continue to maintain their buy rating. Target price now stands at 19 rupees. And for Indus Towers, with a neutral rating, they are targeting for a 440 rupees on Indus Towers. So that's what UBS take on all of these telecom plays.
All right, well, that's a note on telecom, but while we are talking on telecom, we have to talk about RIL as well, because all eyes are currently on the upcoming Reliance AGM, and while we wait for the meeting, Swamit has put together a price movement chart for the stock during AGMs over the years. Let's go across and listen to him for his analysis.
Well, India's largest company, Reliance Industries, will be holding its AGM on August 29th. Now, the AGM expectations for this, expectations for this AGM is somewhat linked to its the management's commentary that has come in the past AGM. Now, 5 years back, the chairman Mukesh Ambani had mentioned that they will do an IPO for the telecom and the retail business within the next 5 years. In 2022, the chairman also mentioned that they are looking to double Reliance Industries' market capitalization in the next 5 years. Now, for Reliance Industries to double its market capitalization, IPO or value unlocking is very critical, and this value unlocking can be done only via demerger or the IPO of the retail and the telecom business of the company, and that is what the street wants to know, and that is the most important commentary that the street would be watching out for from the annual general meeting that will be held on August 29. Apart from that, the update on commissioning of solar cell and model manufacturing plant is something that the street would want more details on. Also, what is the update on scaling up the enterprise business when it comes to the telecom segment, and how they are looking to re-enter the quick commerce business, and any updates on the consumer brand business when it comes to the retail segment would be something that the street would want to watch out for from the August 29th annual general meeting. Now, in the past AGMs also, we have seen some big ticket announcements coming in from the company, because of which there have been some good share price moves in the past. In fact, in the 2019 AGM, when the company had spoken about the deleveraging tactic, on the AGM day, the stock price had moved nearly around 10 odd %. But if you look at the pre-AGM move, we have taken the 10 days move, and 4 out of the 8 past AGMs, if you look at, the share price movement has been kind of negative. On the AGM day, 6 out of 8 times the share price movement has been negative, and post AGM 3 out of 8 times the share price movement has been negative. But do remember, it is the last 3 consecutive AGMs where the share price movement has been negative post the AGM has been completed in the next 10 days. So it would be interesting to track how Reliance Industries share price moves this time. So far, the share prices have gained around 2.5%. It would be important to track how it moves around on the AGM day based on the announcements, and post that as well.
The Reliance AGM has almost, it's become sort of this blockbuster event every year, where we tend to tack on a lot of expectations about, huge announcements that may or may not come. I frankly would not want to hazard a guess. If we look at the annual report very clearly, I think the focus now is starting to shift towards renewable energy milestones. So one would look forward to any specific milestones or timelines around the setting up of additional factories with respect to the 4 legs of their renewable energy journey that they have been basically planning and working on for the last 2 to 3 years. So that would be one. And second, any updates as far as, the unlocking of value of the retail and geo business, which has been a long time coming. I think those are the 2 aspects we'll probably look forward to in this AGM.
All right, let's shift away from Reliance and then talk about another buzzer in today's trade, and that is Zydus Life on the back of 2 news flows. First up, Zydus has received the final approval from the US FDA for the amantadine extended release capsule 68.5 milligram and the tentative approval for 137 milligrams as well. Remember, amantadine is a drug that helps treat Parkinson's disease, and this approval makes Zydus eligible for 180 days of exclusivity for amantadine extended releases capsules for the 68.5 milligrams version. So that's a positive news flow coming in. And secondly, you also have a brokerage note coming in on Zydus Life from Jefferies, and it's a positive note as well. They've gone ahead and upgraded Zydus Life to a buy rating, and target price has been hiked to 1,450 rupees per share versus the earlier target price of 1,210 rupees. They believe Zydus is a high risk, high reward company. It's a non-consensus story as well. And the recent stock correction presents a buying opportunity is what they're saying. The strong US pipeline with at least one big launch worth $80 to $100 billion every year is also faring well for this company, and it's one of the best pipelines in the coverage of Jefferies. They also expect Zydus outperformance to IPM to continue going forward, and the US specialty business and vaccine available as an option value is also something that they're liking. So that's the view coming in from Jefferies on Zydus. Upgraded the stock to a buy rated, target price at $14.50 per share.
Not just Zydus, Snehi, look at the whole pharma pack, because we have been highlighting it's the third straight month that the Nifty Pharma is seen to be gaining, and have also surpassed the gains that the whole index has registered on a YTD basis versus the gains of 2023. But what the D Street experts are looking at in the pharma space, what's their take on the overall sector? Let's go across and listen into them.
In terms of the pharma, we believe the formulation companies, the contract manufacturing companies, and looking at the demand from the US side, where services are still a key and even pharma is still a key, we think that will keep on growing. So taking that into account, we believe the pharma space along with hospitals makes overall healthcare a quite a lucrative bet.
Pharma companies are really compounding machines. I mean, they have done extremely well. So I would say that yes, domestic pharma it's like a branded consumer company, and some of these companies have done extremely well. As far as the global facing companies are concerned, it's difficult to call out generic cycles. So my preference is to bet on companies which are growing their specialty business. So that's where the moat is created. That's where the multi-year visibility and fat margins are created. So I would want to bet on for global markets, companies which are creating these products which will have fat moats and fat margins.
The reason we like Newland is because they had done all the hard work from a long-term perspective to build those capabilities, to build the credibility, to get in the customers, to get in the product. And then it's just a question of those flowing through over a period of time, right? Since we invested, we've seen that pipeline continue to grow. You never have the comfort on a given molecule whether it will succeed or not. But when you have a portfolio of such molecules, then you know that some of these will succeed. And even the ones that don't succeed, the company is taking zero risk on that. You can enjoy sort of decent margins on this business. And as this contract research part of the business has grown over time, the company's fundamentals have improved significantly.
The risk reward tells you that there are various pockets in the market that could do well. NBFCs being one, ITC probably being one of the bigger stories, some of the metal stocks, some of the pharma companies like Dr. Reddy's, Cipla, Sun Pharma. I think this is where our focus area is.
Alright, that's the word coming in from market experts on the rally that we've seen in the pharma space and what to expect going ahead. But let's take it across to my colleague Jinay now. LTI Mindtree, Jinay, you've picked out that stock for us. Tell us why this stock is abuzz and take a look at the uprise on this stock. In fact, almost 7% higher. Jinay, tell us what's fueling this rally today.
Well, yes, LTI Mindtree will be in focus as Kotak equities have upgraded the stock to add, and they've see the fair value for this company at 6,200 rupees. What they believe is that mainly the upgrade comes on the back of healthy recovery expectations from the company over the next couple of years. Kotak believes that consistent strong growth in the normalized environment, given the strong client profile and strength in key areas of client, will aid the company's growth. Also, LTI Mindtree will be a key beneficiary of the recovery in the impacted segments which we have seen in BFS and high-tech segments. Also, Kotak believes that pressure among the clients in other segments such as manufacturing in retail will persist as a short-term headwind, but the company will be able to manage that headwinds as of now. Kotak values the company 28 times of its September 26 estimated EPS, and on the back of this, LTI Mindtree currently trading with the gains of about 7%.
All right, that's about LTI Mindtree, but let's also go across and listen into what Nilesh Shah of Kotak AMC had to say about the IT space as well.
Where valuations are reasonable, first was IT. In those valuations were either below or around their historical averages, and especially those IT companies in mid-cap space which are leveraging AI to deliver cheaper, better, faster solution to their customers. There is also some comfort on the FMCG, election, monsoon, end budget is putting money in the pockets of consumers, and there is opportunity today on the consumer side. Two sectors to watch out for: one, private sector bank, and second, chemical.
Okay, on that note, we'll slip into a very short break. More stocks to talk about on the other side, so you stay tuned. Hi there, welcome back. Good to have you back on Market Fatafat. Let's shift focus to an exclusive then, and we learn from sources that the Union Oil Ministry will soon initiate inter-ministerial consultations on gas storage systems from October. This move comes amid centre's efforts to stabilize gas prices in the country. Let's go across to Prakash Priyadarshi for more details on this. Prakash.
Yes, we are learning from our sources that the Oil Ministry is likely to initiate inter-ministerial consultation on gas storage system. We were given to understand that the inter-ministerial consultation will begin from October 2024 after the ONGC's report, which is likely to be submitted by end of September. Then the IMC will be initiated, and the Oil Ministry is planning to get final cabinet approval by end of this year. As you are aware, and we have reported earlier, that the government is planning to set up gas storage system in the country with an estimated investment of rupees 20,000 crore with the storage capacity of 4 million tons in a first phase. And the target is to have natural gas reserves of 20 to 30 days of requirement in any sort of emergency. Therefore, the government is planning to set up gas storage system across the country, and a new company will be formed to operate a gas storage system, and companies like GAIL, ONGC and OIL may be given stake in the new company.
Well, thank you so much, Prakash, for getting us all those exclusive details. We'll definitely have our eyes on this particular news flow as well as any further developments. But with this, Vaishali, coming back to you, the next stock that you are tracking is M&M, and the stock is well sustaining above that 2800 level. Vaishali, tell us, where do you see the stock headed?
So that's the reason why I think that this stock is actually in a long-term trend is very intact. And after a brief consolidation, it is making an attempt to move once again on the higher side. So I would say with the support of 2700 on the near-term basis, the stock can do 3200 for the upside projection.
That's about M&M. But moving on, let's shift focus to Ahluwalia contract, because this counter had a news flow wherein the company has announced a secure and new order win coming in from Bharat Aluminium Company, that is Balco. That is for a project costing worth rupees 350 crores in total, and that's indeed a positive news flow coming in for Ahluwalia contract. This particular contract could be completed in the next 28 months as well, and on the back of this particular news flow, we have seen a spike coming in, but for now the stock is well sustaining above that 2% gain as well.
Okay, so that's the news flow on Ahluwalia. Positive news flow coming in. But Jinay, you picked out Wipro, the stock from the up and buzzing IT space today. Tell us what's working out for Wipro and why this stock is also holding up to gains today.
Well, as Wipro will be in focus as company forms a new partnership to strengthen its enterprise AI-ready platform. So Wipro's enterprise AI-ready platform is actually powered by Dell AI Factory along with NVIDIA. They will be leveraging this technology to validate new designs. This collaboration will go further, provide an enterprise access to best-in-class technology and leverage Dell's designs for designing the latest chip designs. On the back of this, Wipro is currently trading with the gains of about 3.7%.
Okay, Jinay, thank you so much for taking us through that. Let's talk about Jio Financial, because Jio Financial Services yesterday increased its stake in Jio Payments Bank to 82.17% for 68 crore rupees. This is as per an exchange filing. The investment the company's holding has increased to 82.17% from the earlier 78.95%. This transaction was executed on an arm's length basis and is classified as a related party transaction, but that's the news flow coming in on Jio Financial hiked the stake in Jio Payments Bank yesterday.
All right then, that's for Geo Financials. But moving on, let's talk about NBCC then, because this counter is in focus on the back of the news flow, wherein going ahead on 31st of August, the company will consider a bonus issue. And what we have seen is that NBCC as a stock has already seen a great run up in the past, because if you see the chart on the YTD basis, the stock has already given a return of over 100%, and even in the past 6 months the stock is up over by 50%. So great moves already on NBCC, and whenever a company comes out with an announcement related to money and bonus issue, that's indeed positive for the investors. And on an intraday basis as well, if you'll see, the stock is holding on to the gains of over 11% right now. So that's the news flow coming in on NBCC.
Okay, let's talk about Engineers India now. Vaishali, you've picked out this stock on the charts. Today, the stock is holding up pretty smartly with gains of more than 5%. But if I should focus, talk about the last 1 month, the stock has lost out 14%. It's given a negative return of 14%, in fact. So, what's your view coming in? Do you think that was just a temporary slowdown, and now we can see improvement in the stock?
I would think so, because actually, if I see the weekly and monthly charts, they are all very going well. But on the daily chart, the stock had recently made a high of 300 plus, and from there on, we have seen a good corrective. Currently, it's taken a support of moving average, which holds 200-day moving average. So that holds a lot of validity for this support level. So I think the risk-reward ratio also turns out to be favorable. If the stock moves from here on, we can see a good run up coming towards 245 to 250 level.
All right then, moving on, let's focus to Shoppers Stop then, because for today you can see a move of over 2.5% coming in for Shoppers Stop, and there's indeed an announcement by the company as well, where the company said that Max Factor has joined the forces with Shoppers Stop to build the brick and the mortar presence in India, because the company has come out with a tie-up with some of the brands, in the House of Beauty is the next one through Max Factor, where the iconic Hollywood makeup brand will be entering the Indian markets, and they will expand their presence into 70 Shoppers Stop outlets by the end of this particular year. So that's indeed a news flow on the positive side coming in for Shoppers Stop. But if you'll see the stock movement in the past 6 months, the stock has just given a move of 10%, not much, but on this back of this news flow, some momentum is seen to be building up.
Absolutely, 3% higher is where the stock is. So this announcement is faring well for Shoppers Stop. But let's also listen into Rahul Rathi, the founder and fund manager of Purnarth PMS. He shares his top bets from across the sector. Let's go across and listen into what he likes.
Suzlon we picked up at 20s, in the 20s, was exactly similar to this. So you look at the bottom up, it has to tick all the bottom up boxes, and then you start seeing whether there is a runway that you can play. So while GAIL is not a Pune-based company, Suzlon is, Bajaj is, but the others haven't been. And Phenolics also is. We picked up Phenolics cables too.
All right then, moving on, and while he would not rush to buy the Indian stocks, Mark Faber believes that it is still a better bet than investing in the US. Now, the editor and publisher of Gloom, Boom and Doom report adds that he would look towards commodities instead. So let's go across and listen into his take.
Over the next 7 years, the returns on US equities will be negative in real terms, inflation adjusted. That, I think, is quite clear. And I have maintained for the last 20 or 30 years that an investment in India would be more successful than a typical investment in the United States. I think now the Indian stock market is on the high side. I wouldn't necessarily rush out and invest in India. But I think there's some value in commodity markets. I think food prices are relatively low. And I have friends who are very well informed, and I mean intelligent people. They think World War III is going to happen. I'm more optimistic because I'm an optimistic person. I hope that we can avoid it, but obviously World War III would destroy pretty much all asset markets. That would be a terrible event. And over the next 10 years, as I said, or 7 years, I think if you can just maintain your purchasing power, you're doing okay. And so I still feel that precious metals is a favorable avenue. It may not be the best, but it's relatively safe.
Alright, on that note, we're completely timed out on this edition of Market Fatafat. We'd like to thank Jinay, Dwani as well as Vaishali for joining us on the show. But on that note, it's a wrap from Shrishti and me. But as we bid you goodbye, you don't go anywhere. Closing trades takes all the action forward.